Subscribe to LearnCab and hit the bell icon to get notified.
Namaskaram. So we are discussing Union Budget 2022 and major reforms that are proposed under income tax law very specifically. You people are already aware of many proposals which are brought by Budget 2022 through social media or news channels or any other sources which are available with you. But my dear friends, we are going to discuss the budget through sections because ultimately as a professionals we need to know which all sections are going to get amended. As a finance minister, Ms. Nirmala Sitharaman cannot focus on each and every section. But we practitioners, we have to have clear-cut understanding of proposals through section. So I'll try to introduce few important amendments and overall 85 sections which are proposed to be amended in Budget 2022. Let's start. So Budget 2022 is also known as Finance Bill 2022, which will end up becoming Finance Act 2022 in another 2 months' time. 85 amendments are already proposed. Apart from that, few more amendments will be brought to Finance Act 2022. We are only talking about direct taxes and our focus has to be on direct taxes. For indirect taxes and any other general knowledge, we will have separate session. So why do we amend laws? Why is it required to amend Income Tax Act? Because Income Tax Act doesn't only focus on revenue collection for department. It is having wider objectives. And some of those objectives are reflected well through this budget as well. So the provisions of Finance Bill 2022 relating to amendment of Income Tax Act 1961 to continue reform in direct tax system through tax incentives, removing difficulties faced by the taxpayers, rationalization of various provisions which were supposed to be done, and few more provisions are there which can be rationalized, and government will take appropriate measures sooner or later to rationalize and simplify the provision to the extent possible. So the overall budget can be divided into some heads through which income tax provision can be looked into. First of all, very much curiosity created by finance bill or budget about the income tax rates. So one good news for all of you that income tax rates are unchanged. So we don't have to update our softwares, we don't have to update our calculation mechanisms. Everything remains same as compared to the budget 2021 or last year's Finance Act. Promoting voluntary tax compliance and reducing tax litigation. Government is trying that since last few years, and this budget also have certain provisions where government is saying now income tax department will not fight with assessee under certain circumstances, and at the same time we will try to take care of voluntary compliance from assessee's part itself. Socio-economic welfare measures are taken care. They have given certain incentives to Startup India scheme. They have given incentive for the manufacturing segment in India. Widening and deepening the tax base. One of the most attractive aspect of this budget is to tax cryptocurrency market, digital currency market. Revenue mobilization is another thing, and phasing out of lot of exemptions which were available for a non-resident and which were not required as of now, because anyhow India is becoming one of the strongest and fastest growing economy. So there is no need to provide few unnecessary exemptions. So that's what they have taken care, and they are removed from the income tax. Rationalization of certain provisions. Rationalization means they will just provide explanation. Original intent of law was the same, but due to certain high courts and Supreme Court judges, there is a confusion in the application of the law. So they rationalize it by putting an explanation under various provisions, and that is been done in this budget as well. So my dear friend, there are 85 sections, and these are the list of 85 sections that we are discussing now. After discussing the list of 85 sections, I would love to touch upon few important amendments of this budget through section wise only. So obviously section 2 is amended because lot of definitions are inserted, like definition of digital assets and all. Few exemptions are deleted, few exemptions are inserted, that is under section 10. Section 11, section 12A, section 12AB, section 13, all these sections are applicable for taxation of trust or taxation of non-profit making organizations or institutions. So for them also we are having few amendments. Section 14A, we are just rationalizing the section. There is no amendment as such. There is one explanation added. Section 17, taxation of perquisite due to COVID. There is one small amendment that we will discuss, that if employer gives some COVID measure fund to employee during the difficult time, so that should not be taxable as his income or perquisite under section 17. Section 35, again rationalization of scientific research organization related expenses. 37, one explanation is added for disallowing expenditures paid by pharmaceutical company to medical staff or medical professionals, where manipulation used to happen. They was giving a lot of benefit to the staff so that the medical professional can refer the case or can refer the prescribe the medicines of so and so company. So that is taken care very well now. Section 40, amounts which are not deductible, that means disallowances. There was a confusion on health and education says whether it is allowed as an expenditure or disallowed as an expenditure. Few courts have said yes, few courts have said no. So they have inserted the intention of the law, that is we don't want to give any deduction of income tax, surcharge or even cess by whatever name called. So that is also taken care here. Section 43B is also rationalized, deduction on payment basis. Section 50, depreciable asset for goodwill. Okay. 56, income from other sources, gift taxation, some minor amendment due to COVID we have to discuss there. Section 68, cash credits, unaccounted money, undisclosed money, for that also there is a law. Section 79, 79A, carry forward and set off of losses of public sector undertaking particularly. Section 80 CCD, state government employees are going to get benefit which was available only with the central government employee, that is 14% of employers contribution to the pension fund, notified pension fund, that is there now for state government employees as well. That is again rationalization of provisions. Section 80DD, some benefit for handicap dependent relative if it is there with you. So yes, if you can buy the annuity plan or insurance scheme, then you will be getting the benefits. Section 80 IAC, that is socio-economic welfare. I just mentioned that government is extending the benefit of startup for one more year. This 31st March was the last date. 31st March 2022 was the last date for getting eligible under 80 IAC. So government have extended the due date by another 1 year so that more and more youth can start the startup entities. Section 80 LA, again few benefits for IFSC units. 92 CA, 94 are international taxation measures, that is taken care. Section 115 BAB, concessional tax rate of 15% for domestic company. Okay, so there was a sunset clause which was 31st March 2023. That section, that benefit of commencement of the business, that clause is extended by one more year, that is 31st March 2024. So government have relaxed the sunset clause by postponing the commencement date so that more and more manufacturing entity or power generating entity can take benefit of 115 BAB, 15% concessional rate of tax. 115 BBD, if India is investing or Indian companies are investing into foreign entities for more than 26%, and if the foreign company gives the dividend to Indian company, the dividend was taxable at 15% concessional tax rate. Government says there is no point in giving such kind of concession now anymore, because already India is going global. Many Indian companies are investing into foreign companies and overall tax rates of the domestic company has gone down substantially. No need of this section anymore. So they have deleted this section 115 BBD. 115 BBH and BBI. Two new special rates of tax are inserted, specifically 115 BBH. I am going to talk more about 115 BBH, that is taxation of virtual digital asset, in short cryptocurrency. We are having detailed discussion on it. 115 JC, yes, they have reduced the tax rate of cooperative society AMT rate, alternative minimum tax rate, which is equivalent to MAT rate kind of, okay, to 15% from 18.5%. Some provisions are amended in respect of AMT, that is, and for trust taxation also 115T, 115TF, all these are trust related taxation provision. 119, instruction to subordinate authority, this is income tax power and income tax authorities and their power. So one more section is inserted there where CBDT is given more power to relax even fees charged under section 234F. So in genuine cases, if you have filed a return belatedly, CBDT is now empowered to give relaxation or concession from that late filing fee. Search and seizure related amendments are there in the law. Search, seizure and survey related some procedural aspect they have amended. One new section is added in filing of income tax return, that is for day-to-day work for professionals. Updated return of income. So already we had valid return, loss return, belated return, revised return, defective return. Now one more word will be added into that family, and that is updated return. Return which can be updated within 24 months from the end of the assessment year, with the option which was not available earlier. Now this option is available, but there are a lot of limitations of this section that we will discuss in detail in the session itself. Obviously, when you are updating the return or filing the belated return, even after completion of your assessment year, government want some additional tax from you. That additional tax will be paid under section 140B. So for that also government have inserted new section altogether. Assessment procedure under 143, 144, 140, 144B, faceless assessment mechanism is rationalized, simplified to some extent. 144C, reference to dispute resolution panel, and 245MA, dispute resolution committee. These sections are also little bit rationalized. They have like the language is modified to the extent it should become more relevant. 148, section 148 or section 148A, 148B is a reopening of the cases, a reassessment of the cases under section 147. For that little bit procedural aspect have been changed, not much. Those are only ornamental amendments, not substantial amendments, my dear friend. So all these sections were there, 149, 153, 153B, 156A, that is for demand of the notice. All these are assessment related ornamental amendments, not much. Even Finance Minister has not discussed this during the budget speech. 158AA and 158A, yes, these are the little important provision. If you are not agreeing with income tax department, we have dedicated appeal mechanism in the law, where first appeal happens to CIT appeal, next appeal happens to ITAT, Income Tax Appellate Tribunal, and from Income Tax Appellate Tribunal onwards, if it is the only substantial question of law, the appeal can be presented before High Court and then Supreme Court. Now, the High Court and Supreme Court fight was happening through department also, through assessees also. So 158 AB section puts restriction on department that okay, if already similar question, identical question of law is pending in High Court or Supreme Court, you please do not file another appeal against the assessee. You just give one declaration to assessee, we are waiting for this particular judgment to be done, and when that judgment is done, we will intimate or we will apply the same judgment in your case because your case is identical, to reduce the repetitive litigation, repetitive appeal on the similar matter or identical matter. Earlier it was not possible because appeal used to happen in physical papers. Now because everything is technologically advanced, so we can easily gather the provisions or cases which are ongoing on particular section. And that's the reason government is putting restriction on income tax department, not on the assessee, for avoiding repetitive appeals under these two sections. Section 170, 170A, 179 is for liability in case of succession, liquidation, some minor amendment, not again substantial amendment. 194IA, transfer of immobile property. Whenever you transfer immobile property, you have to deduct TDS at the rate of 1%. If the value of the property, if the consideration exceeds 50 lakh. So that section is rationalized with the provisions of capital gain and section 43CA. If you know, in 50C, under capital gain, we take stamp duty value of the property or actual consideration, whichever is higher if stamp duty value exceeds 110% of actual consideration. So that mismatch is there. No black money, lot of people uses black money in the transaction of transferring the property. To control that, we have specific anti-avoidance rule under section 50C and 43CA. That section says stamp duty value or actual consideration, whichever is higher, but TDS was deducted only on actual consideration. That means there was a mismatch. How mismatch? If stamp duty value is 80 lakh, actual consideration is 60 lakh. Now capital gain assessment will happen at 80 lakh because whichever is higher will be taken in the capital gain chapter, whereas the TDS was deducted at 60 lakh. Now government have rationalized both the section to match the provision. The TDS will be deducted in the same manner as in the manner where you compute the capital gain, meaning thereby stamp duty value or actual consideration, whichever is higher will be taken. On that higher amount TDS will be deducted. Okay. So that is there. 194 IB, payment by rent of certain individual, that is again minor amendment in the section. 194R, new deduction, new section altogether for TDS for PGBP assessees, and 194S is for cryptocurrency taxation, that is also there. Section 201, 206AB, 206C, 234A, 234B, recovery of taxes through TDS, TCS, advance tax, and their respective provisions are being amended. 139A, refund for denying the liability to deduct tax. This is also in relation to TDS in respect of non-resident. Section 195, earlier the non-resident had to file appeal to get the amount refund. Now we are giving the power to AO. AO can discharge the refund if you make application under section 239A. 245 MA, if you people are aware, earlier we had income tax settlement commission related provisions. Those provisions are done away with now. Income tax settlement commission is squashed completely, and instead of that we are having now these advanced dispute resolution committee. The dispute resolution committee will be taking care of those provisions. So they have just modified certain provisions under section 245 MA, which is inserted instead of in place of a settlement commission mechanism. Section 248, section 253, 255, 263, all the appellate proceedings of income tax, which are again rationalized. Certain penalty provisions are modified. Definitely it needs to be modified. Penalty provisions are the provisions which scares income tax assessee for doing the default in tax management or for doing the default in tax payments. So that's the reason penalty provisions should be stringent, and they are going to make it more and more stricter day by day. That's the intention of the law. So they have inserted few penalties and existing penalty provisions which are there under various section of 271, 271 AAD, 271 AAE, section 271C, 272A, 276 AB, that is for non-deduction and non-collection of the taxes. So penalty and prosecution provisions are also amended to some extent. These are the prosecution provisions, section 276B, 276CC, 278A, punishment for second and subsequent offense. All these provisions are amended to little bit extent. Okay. So let's talk about budget, highlights of budgets. So this is where you need your curiosity can be addressed now. Okay, you have seen more than 85 provisions are amended. Now we are going to discuss the highlighted aspect of the budget, the most important aspect of the budget. For individual, company, partnership firm, every assessee, tax rates has not changed. One relaxation is given by the government for cooperative societies. Earlier, after 1 crore only, cooperative societies were supposed to pay surcharge at the rate of 12% to match their taxability with the company and to give the equal, ground field. The tax surcharge rates of the company are applicable to cooperative societies also. So up to 1 crore no surcharge, 1 crore to 10 crore of total income 7% surcharge, and above 10 crore 12% surcharge will be applicable both for the company as well as cooperative societies. You might be knowing the highest rate of surcharge is for individuals up to 50 lakh no surcharge, 50 lakh to 1 crore we are having 10% surcharge, 1 crore to 2 crore 15% surcharge, 2 crore to 5 crore 25% surcharge, above 5 crore 37% surcharge. So this highest rates of surcharge, which is 25 and 37, is too harsh for the people who are earning income through share market. Therefore, government had restricted the surcharge on 3 incomes till last year. Section 111A, short-term capital gain from the share market. Section 112A, long-term capital gain from the share market, and dividend income. On this, the highest rate of surcharge was restricted to the 15%. Now, any long-term capital gain, whether it is the share market, whether it is STT paid, whether it is a land and building, any long-term capital gain will be having highest rate of surcharge as 15. Earlier it was possible to have 25 and 37 for sale of land. Now it is maximum 15%. So that's a relaxation given to few assessees. 115 BBH, taxation of cryptocurrency, where the total income of the assessee includes any income from transfer of any virtual digital asset. The income tax payable shall be the amount of income tax calculated at the rate of 30%. No deduction in respect of any expenditure. You cannot claim office rent, interest, depreciation of the asset. No deduction is allowed. Only cost of acquisition will be allowed to you and that has to be substantiated by the evidences. So, as I told you, this tax has to be paid because cryptocurrency is taxable. To keep track record on that, any payer of the money, if there is a bank which is making payment for transfer of cryptocurrency asset, that payer shall deduct your TDS at the rate of 1%. That payer shall deduct your TDS under 194S at the rate of 1%. Government is not interested into the 1% TDS. Government is more interested into data of that person who have transferred this virtual digital asset. No tax shall be deducted. No tax shall be deducted if your amount is up to 50,000 rupees. If your income is only up to 50,000 rupees, TDS is not deducted. It is taxable, but TDS will not be deducted. So this is what is there for cryptocurrency. So what do you mean by virtual digital asset? Lot of people are asking this question. What do you mean by virtual digital asset? Why finance minister have not put any light on it? So they have given the definition. Section 2 clause 47A of Income Tax Act is inserted to give the definition to cryptocurrency or to any virtual digital asset. Any information, code or number or token, any information, any code, any number, any token, but not Indian currency or foreign currency. Currency is not taxable under this provision. Generated through cryptographic means or any other means by whatever name called, providing a digital representation of value, exchange with or without consideration, with a promise or representation of having inherent value. So we are saying now cryptocurrency is having value, how nobody knows. But everybody says crypto is having some value, Bitcoin is having value, okay? Or function as store of the value or unit account, including use of any financial transaction or investment, but not limited to investment scheme, and can be transferred, stored and traded electronically. So one of my students asked me, sir, whether the gold that we purchase in Amazon account or Google Pay account, we invest in gold also, right? Digital gold. So is it covered under virtual digital assets? So obviously no, gold is already asset. That will be treated as a normal gold. It won't be treated as a digital asset. Here they are focusing more on cryptocurrency only. NFT is another asset. So what is NFT? So you can Google out NFT or values of NFT. You'll get some images and some pictures, some art collection by many celebrities. So instead of selling the art now, they create some kind of derivative contract underlying that particular art, and they keep trading that particular instrument that is called as NFT, non-fungible token. So that is also one of the digital asset which is taxable now. And government have kept power with them. Any other asset that they wanted to notify in future, they can notify under section 247A. Alright, so that was about taxation of cryptocurrency. Next, Section 11 provides exemption to trust to institutions who are engaged into charitable activities, and obviously they are registered under income tax under Section 12AB. Now there was the ambiguity on funds collected for repairs of temple, gurudwara and churches, whether it is a corpus fund and not taxable under the law, or whether it is a normal fund and should be applied to get the exemption from the law. So government have clarified it now. Fund raised by gurudwara, temple, churches can be for the repair and renovation of the temple, can be considered as corpus at the option of the trust, subject to the trust complies certain conditions, and all we need to discuss in detail when we study the whole provision separately, because it is very deep discussion. But overall condition, I will tell you, the firm has to apply that fund only for the repair and renovation. The fund has to invest that fund into Section 11(5) safe mode, which is prescribed under the law. So there are certain conditions which has to be followed, then only you will get this particular benefit. Otherwise it will become a taxable fund, and then you have to apply and claim exemption. Another Section 37(1), as I told you, no deduction incurred by the entity for business transaction, even if it is very much required for the business, but it is prohibited in the law. It is an offensive expenditure, so no deduction allowed. This provision was already there. So what they have amended now, they are saying not only under the law, it can be prohibited under the guidelines issued by any institute, or it can be prohibited by any code of conduct or code of ethics. Still it is disallowed. Earlier we used to think anything which is prohibited by law, only that is illegal. Now they are saying no, even if it is by guidelines, like for medical professional, they are having their code of conduct. Through code of conduct, through ethical requirement, if there are certain activities which are prohibited to be done, now even those, if pharma companies are spending money on those activities, it will be considered as a disallowances. So to provide any benefit or perquisite in whatever form to a person, whether or not carrying on business or exercising a profession, an acceptance of such benefit or perquisite by such person is in violation of any law, any rule, any regulation or any guideline shall be disallowed now under Section 37(1), under explanation of Section 37(1). Sir, what if I have done the mistake, I have broken the law and I have paid fees for compounding the offense? I was supposed to go for jail for imprisonment of 6 months, but government gave me option, you pay 2 crore rupees and don't go to the jail. So I paid 2 crore rupees so that I don't want to go to jail, and because this 6 months, if I go to the jail, my business will come down, my losses will be there. So I have to be there in business. You understand? I have to be there in a business to make profit. Can I claim deduction of that 2 crore rupees which I paid to the court, which I paid to the government for compounding my offenses? So answer is no, because that you have done some crime, therefore you are paying the penalties, and any penalty for breach of law shall not be allowed as a deduction, which is clearly expressed here. There was some contradicting judgments in respect of this. Government have overruled all those judgments by proposing this amendment. Section 40 clause A, disallowances of cess, I have already clarified. Definitely now health and education cess is disallowed, no need to discuss much on that. Section 80 ISC benefit is extended up to 31st March 2023. Now if you want to indulge into startup activities which have potentials of wealth creation, employment creation, you are innovative, your processes are innovative, your product is innovative, then definitely you can go and get yourself registered under Section 80 ISC to claim benefit of 3 years tax holiday out of first 10 years of incorporation. 80CCD, as I told you earlier, only central government people were having 14% concession for contribution done by employer to their pension fund. Now even state government people will enjoy this benefit. Section 115 BAB is extended up to 31st March 2024. One more year is given so that you can peacefully commence your manufacturing activity. So you have to tell your clients now, do not rush for incorporating a company. You do your research, you do your study, and then gradually we can start manufacturing of product, or electricity transmission and distribution entity. 115 BBD is deleted now, I told you. 115 BBI, if trust and institution is having some income which is prohibited to them, okay, so that income should not be taxable at normal rates. That is, income has to be taxable at highest possible rate. Like trusts are allowed to accumulate 85% of their income for some future projects which are within the object of the trust. But if trust has broken the law and have misused the fund, then it has to be taxed at a highest possible rate, not at normal rates, or there should not be any deduction or exemption in respect of that violation. Therefore, one new section is inserted in the law, that is 115 BBI, which will be taxing 30% of trust income at flat rate without any deduction, without any set off. So specified income means income accumulated or set apart in excess of the 15% of the income, where accumulation is not allowed under the provisions of the law, and other deemed incomes of the trust, it will be taxable at 30%. 115 JC, earlier companies were having MAT 18.5%, which is brought down to 15%. So cooperative societies were having MAT at the rate of 85% in the law. So there was a mismatch between cooperative rate, cooperative society rates and company. So to match those rates, we have already discussed surcharge rates have changed. Now here AMT rate, alternative minimum tax rate, has also reduced to 15% for cooperative societies. 139(8)A, updated return, another most amazing amendment. So you might have encountered a situation in your life where assessee will come to you and he will say, I have to file returns for 3 years. That bank people are asking for returns of 3 years. But you know now the current portal allow you to file return only for 1 year, not more than 1 year. So what if somebody wants to pay tax? Why government should restrict it? Somebody wanted to pay tax for many reasons. He is afraid that government will raid his premises. He is afraid that he has earned a lot of income, and now data synchronization is very much efficient, and he wanted to show that income to government, pay the tax, pay the interest, close the matter, file the return. But government have restricted only 1 year filing. For those type of assessees, government have brought concept of section 139(8)A, where assessee is allowed to file updated return even after expiry of the assessment year, and not even expiry, after 24 months, that means 2 more years is given. So for current year income, you can file your return in assessment year, and 2 more years, that means 3 years are given to you in together to file your return. Obviously, if you are filing the return beyond assessment year, government cannot allow you to file without paying additional amount of taxes, additional fee, additional interest. So that provisions are also included here. So filing of updated return of income by any person, whether he has filed original return or not, that doesn't make any difference. You want to file now, you can file by paying additional tax. Sir, additional amount of tax will be 25% or 50% depending upon the situation that they will bring very soon. And the tax has to be paid first, and then only you can file the updated return. The provision shall not apply if the updated return is a return of loss. If you want to claim loss, you cannot file the return. Sir, if you want to reduce your tax liability, you cannot file the return. You can file the return only if you want to show higher income. And that too, there are certain provisos provided under 139(8)A. I wanted to make this video as short as possible. Therefore, I did not cover, but I wanted to mention that if your premises is raided by the department, you cannot file updated return. If your case is already completed by the department under 144 base judgment assessment, you cannot file updated return. If your premises is surveyed under section 133A, you cannot file updated return. So there are various situations under which you are not allowed to file updated return. Okay. You know that if somebody gives me any perquisite or benefit in respect of my business, it is taxable as income under section 28. So if my client has given me 30,000 rupees gift, sir, is it taxable? It's not a professional fee. Is it taxable? Answer is yes. But many people were not disclosing this income to government now. So what government have said, if you have given any perquisite to any professional or any business class, you are supposed to deduct TDS under 194R, new section. What is the rate, sir? 10% is the rate of the perquisite. It can be monetary asset, it can be non-monetary asset. You have to deduct 10% of the tax on that. Okay. Sir, if the gift amount is not exceeding 20,000, then you are relaxed, you don't have to pay. That is the threshold limit of 194R. 158AA, I have already told you, department will try to avoid repetitive appeal on the identical matter. Only they have to give some notification to the assessee that we will wait for the final judgment of existing case which is going on, which is almost similar to your case. So that procedure will be taken care, and government is trying to give lot of relaxation to the assessee through the appeal proceedings also. During the COVID, if some of the family members of the assessees have died and he is receiving some incentives or some relief amount from some organization, so do not consider it as a gift even if it is more than 50,000 rupees, and it should not become taxable. Therefore, law is amended here and they are providing that exemption for gift received during the COVID period. From employer, if you have received this, then there is no limit. From non-employer, if you have received this, then there is a limit. They are proposing that 10 lakh rupees should be the higher amount. Otherwise, people will take this as a clause and they might avoid the taxation. That's why they are saying, okay, for non-employer, we will have 10 lakh rupees as a higher upper limit. 194IA I have already discussed. Now, TDS will be deducted at stamp duty value or actual consideration, whichever is higher. And if stamp duty value and actual consideration both are less than 50 lakh rupees, then 194IA will not become applicable. So this is how we have discussed many provisions section wise to have better understanding of budget analysis. I hope I will be recording more and more videos on the section analysis. Now overall budget analysis is done. As and when government brings more and more amendment through some sections, we will discuss that in detail. If you want us to record a few more videos about provisions of the income tax law on which you do not have the clarity, you can put that in the comment box and we will try to make it as soon as possible. Thanks a lot. God bless you all. Thank you.
Subscribe to LearnCab and hit the bell icon to get notified.